Gold dropped almost 10%. That alone should scare you. But silver didn't just correct, it was destroyed. More than 30% wiped out. And suddenly, a question nobody wanted to ask started spreading. What if silver just behaved like a meme coin? And we were too afraid to admit it? While you were still watching Bitcoin, over $1.7 billion was forcibly liquidated out of the crypto market. You didn't buy hype. You didn't chase leverage. You bought safety, gold, silver, a safe haven. And now you're staring at the screen asking yourself one question. How did the thing meant to protect me end up hurting me the most? Late January 2026 didn't feel like a normal sell-off. Everything was moving. Gold, silver, crypto, stocks, bonds, the dollar. Safe havens were falling. Risk assets were getting liquidated. Nothing behaved the way it was supposed to. This wasn't retail panic. This was something much colder, much more mechanical. Here's the rule nobody tells you. When margin calls hit, people don't sell what they want to sell. They sell what they can sell. Liquidity first, beliefs later. Gold is liquid. Silver is liquid. Bitcoin trades 24/7, so they get sold first, not because they failed, but because they were available. Then came the trigger. The market started pricing the possibility that Kevin Warsh could become the next Fed chair, and Warsh represents one thing above all else: the end of easy money, the end of the Fed put, positive, real rates. Markets don't wait for confirmation. They price expectations, and when the cost of money changes, leverage breaks first. Silver wasn't just a metal, it was leverage in disguise. Small market, thin liquidity, extremely leveraged futures. When prices turned, margin requirements exploded, stop losses chained, order books emptied. This wasn't selling, this was forced liquidation, an open interest flush, a margin spiral. Bitcoin didn't escape. It dropped more than $10,000. $1.7 billion got liquidated. But this wasn't a structural breakdown. This wasn't fraud. This wasn't a collapse of belief. It was leverage being flushed. Bitcoin didn't fail. It participated in the same system reset. The real damage wasn't the chart. It was the realization that safe havens can hurt, that diversification can fail, that the rules change when liquidity disappears, and nobody rings a bell before it happens. Late January 2026 wasn't a price story. It was a survival story. In regime shifts, no one gets protected. Only leverage gets eliminated. Not because people were wrong, but because they didn't survive long enough. This is Market Signals,